Oh, let's give this a go. Ladies and gentlemen, my brothers and sisters, it is I, Hugh Hendry, sitting here with the tropical background, the noise. Some people called it irritating and scratchy sound. It's wonderful. It's the tropics. Anyway, here begins the acid riff for a new week. Monday, the 6th of October. Day 6 of the shutdown. The government's gone dark. Maybe I'll go dark. I was looking at the National Association of whatever, of looking at hurricanes. Amazing to see these storms. This is like the shipping news in advance, but these enormous storms off the, what would it be, the west coast of Africa. And then looking at the purported travel and velocity, taking it straight to St. Bart's. I'm glad to report that subsequent observations suggest it's looping to the north. Good riddance. Anyway, I mean, it's amazing. I thought that was a government website. Why is it still up and running? The government's gone dark. Their numbers are trapped behind a locked door. They're in a drawer. It's marked, do not touch. May they remain there forever, would be my point. But strangely, the absence of data today, did it make today clearer? I kind of want to say it did. You see, the vacuum, the data vacuum, it wasn't filled by noise. It was filled by a legend. Tudor Jones. Now, we were discussing, it was only the previous podcast, and we were talking about interviews with great traders recorded at the end of the 1980s by Jack Schwager. And on his second book, just like I featured in the second book, not the same book, but many years later, but the new market traders had Tudor Jones. And he walked onto the set of CNBC, and for once, the television, the financial television, it stopped chattering and it started teaching. It was all about signal and really no noise. CNBC today had a huge Sharpe ratio. We will come to that. I will attempt to come to that as I try and navigate my garden Sonos. It does drive me crazy. I am going to have to pause again. The music refuses to play. The more money I spend on speakers, the less connectivity. What is going on? The music drives me bonkers. It just refuses to constantly play. Anyway, I'm boring you. Let's bore you further with the calendar of economic events. Let's just say it, the American diary was empty of substance today. The trade balance, which used to be a huge deal apparently, and again, if we go back to Schwager and his market wizards, that was the key of economic release. Not anymore. Apparently it's been nudged to tomorrow. I don't know what an extra day, what difference that makes. I mean, government is suspended today and tomorrow. We shall see. Labour and commerce prints, economic prints that is, they were suspended. And we had one lamentable appearance from a regional Fed president. Have you ever heard of Jeff Schmid? I have never heard of Jeff. He's probably a very solid, pretty unspectacular kind of guy. Gets paid about $230,000 like all the other governors. In the world of markets and hedge funds, that is a pittance. He's president of the Federal Reserve Bank of Kansas City, so he governs from Montana to New Mexico. And I suspect with Kansas City, I will be making reference to Dorothy Toto, the Emerald City. Yes, we are. Where are we? We are on the yellow brick road. And his speech, I mean, yeah, it was like Emerald City. It was like a TED Talk taken from the pages of Dorothy and her great wander through the other side. Can I paraphrase it? Can I say big smoke, big voice, like the wizard? Then poof, just a guy with a spreadsheet and a fog machine. I mean, I kind of perused it and I'm thinking flying monkeys are the only thing that were moving in that speech. That and my eyes, which kept leading to heaven. I kept waiting for a twister. Instead, all I got was elevator music. Can I say it was a waste of time? I can't say it was a waste of time. Wake me up, Toto. Somewhere over the forecast, the skies are blue. But down here is data dependency again and again. How many times did they have to say it? Use the force. What's he called? Use the force, Mr. Federal Reserve Governor, Mr. Schmid. Use the force. You don't need the data. You're a banker. Look around. Talk to the denizens of your states. Talk to the business leaders. What are they saying? It's as if markets cheered for Toto to chew the cable, break the connection. I want to say the only thing that really printed today was price. Stocks opened risk on. And on a day with no official on a day with no official statistics, Price wrote the diary. I like that. Price wrote the diary. We had, I do this, hey, $50 billion stocks, moving 5%. I want to know. Only one name. Advanced Micro Devices, AMD. Almost closed up 25%, I think 23% and change. 23% and change. Why? Why? I mean, who cares? It just did. But ChatGPT made a commitment, a very, very large commitment, to buy their chips. And they structured a deal where they got warrants. And if they spend all of that money, they can trigger those warrants, which have the equity, the assumed 10% equity purchase via the warrants comes really from the commitment to buy the AMD chips, to buy a lot of the AMD chips. This is a deal that comes straight out of the bubble textbooks, but it lit a fuse. ChatGPT buying 10% of a $50 billion plus company is what's, let's say it sounds like they spent $5 billion. They don't have $5 billion and their priorities are buying computing power. This was a cute deal. And that's kind of how stock leadership looks like on a data blackout day. But real headlines, well, real fantastically absurd headlines like AMD, real volume, real moves. Yes, AMD was kind of hocus pocus, but sometimes it pays to be a maniac or have the naivety of a child and just watch the tape. Speculators want to party. Tudor Jones was kind of referencing that Prince song, "Party Like It's 1999," and in doing so, they reveal their intentions. And again, the great trader says, why resist? Why resist? Because you're the only adult in the room? What the market cares about you? The only thing the market cares about is price and what price did today versus what it did the day before and what it did in relation to news announcements. And the price is saying it wants to party, which takes us to the real event. I mean, there were two real events. We'll come to Japan, which was very real. But let's take a ride on the PTJ. It sounds like a private jet. Tudor Jones, the main act. I tell you that financial TV is again, it's like, who are these jokers? They're largely operators. They're people that work within large investment houses, and they're remunerated on the basis of assets under management. They are there to gather assets, and so they go on television as a means to encourage you to put your hard-earned money with them. And most of the time, it's noise. They're never asked to justify why we should listen to their views, why them and not anyone else. But occasionally we get legends, and Paul Tudor Jones is a legend. And when he starts talking, you take notes. That's what I do. He's the macro trader who shorted 1987. He made 67% in one of the worst months of the last 100 years. The S&P was down, I think, 21%. I wonder who else did that. I mean, yes, I'm still coughing. But I certain, I made 50%. I think S&P was down 16 or 17% in October 2008. Anyway, who cares? Actually, do you know what? He is one of my favorite PTJ sayings is genius. Genius is staying lucky. If he was lucky in making 67% that month, I think he made over 200% for the year. If he was lucky, then the genius is he kept being lucky. His returns have been extraordinary. And he's the man who turned tape reading kind of into a creed. His method is really damn simple. It's simple to say, and it would seem it's very hard to live by most professional investors. What does he say? He says, respect the trend. I mean, it may as well be Marty Zweig. Buy things going up. That's what I say. Remarkable, the novice and indeed the professional traders who put narrative in front of everything else and find themselves buying stocks making new lows, buying stocks which are in very, very definite downtrends on the basis that the narrative will change. Paul Tudor Jones teaches respect of the trend, not respect of the narrative. When the narrative meets a trend, the narrative is given legitimacy, but it's the trend that's the most important factor. Anyway, Paul Tudor Jones, again, another thing that comes out of it is paranoia. Guy cuts losers fast. And again, it's a bit like I was telling you, I was terrified when I was managing money. I was terrified of the loss that would lead to people removing my license to thrill. That a devastating loss. What is a devastating loss? These kind of losses, drawdowns of 50, 60, 70%. I mean, the amount of money you've got to make to get back just to being flat, that's devastating. And the investors don't like it, and they'll close you down. They close you down, your magic carpet trip is over. So Paul Tudor Jones, I mean, I was going to say like me, but I'm like him. He is the God. You respect the trend. Now, there's one line that he goes on about all the time, and it's the 1 year moving average. You own stocks which are trending above their 1 year moving average, and you kind of cut them. Your narrative goes out the window when you break the 1 year moving average. Really, really simple. Cut losers fast. Another thing about him, never averages down. It's like prices falling, so I'm going to buy more, I'm going to buy more, I'm going to buy more. Never does that. He's all about momentum. Along the way, momentum got a bad name. I do not understand why. It certainly wasn't given a bad name by me. And so if you have your narrative and the price of the risk item that you want to buy is above the 1 year average, tick, you are a legitimate believer. And if it breaks the 1 year average, you stop believing and you're out. Humility, but as humility, it requires kind of a mental toughness. And it's why Paul Tudor Jones matters. Doesn't worship the narrative, he worships the moving average. And what he said today was the ingredients for a continuing, or it kind of sounded like an acceleration, a massive rally. Those ingredients are on the table in front of us today. So like Mr. Schmidt from Kansas City was talking about, oh, my rusty violin, the data is so hard to read. Paul Tudor Jones was saying, we are on the verge of just the most insane rally. He used the metaphor of 1999 because everyone understands. We thought we'd never see more insanity than that. The record highs, a new technology story. But Paul Tudor Jones was saying, unlike then, unlike back then, the Fed was hiking rates. Greenspan's like, irrational exuberance is going to end in tears. He raised rates. And he let the market fall a great deal. I think the market fell at least 60% before he relented and started cutting interest rates. Anyway, Paul Tudor Jones was saying, look at gold, new highs. Look at Bitcoin, new highs. You weren't really seeing that in 1999. And you have these create, like the Oracle profit beat, which again featured OpenAI. OpenAI is a company doing about $12-13 billion in revenue, growing rapidly. But $12-13 billion, which is in the last, it's now the largest ever private equity company valuation, $500 billion. And when you think of the added market capitalization from news involving it and it spending money that it presently doesn't have, it could easily be another couple $100 billion. And yeah, that again, 1999, we kind of got those similar stories with telecom companies and the equipment providers and vendor financing and weird deals. But we got a Fed that's going to be cutting interest rates at the end of this month and probably cutting interest rates again and again. In a fiscal book, the big fat stupid Trump fiscal thing that's fiscal expansion, monetary expansion. Stocks are trading above the 1-year high. And Paul Tudor Jones is like, I'm not running a museum. I'm running a risk book. And I'm positioned for a blow-off top. Blow-off top. So I looked at a few charts. Pub quiz. Where is the NASDAQ, the spot price, versus the 1-year moving average? What's the percentage difference? And the percentage difference is about 13%. So we're 13% above a rising line. Now, almost certainly. So if you own these meme-like NASDAQ stocks, you are on average about 13% above the line. And so if you got $1 million, let's say, in a NASDAQ ETF, Paul Tudor Jones is saying, you've got to give that, you've got to be prepared to lose $150,000. That it can drop, let's say, $150,000 without challenging anything. It's when it goes below the 1-year moving average that he would close it. And then it sounds simple, but recall that this year, I think we had a 26%. That really, 26% was a massive down move in NASDAQ this year, and it took you below moving averages. I guess Paul Tudor Jones would have closed his positions, And then he would note that they're above again. And he would reinstate. Tricky business. But you're running about 15% risk. I was going to say paradoxically, but in some respects, gold. I don't think gold gets the credit for credit, but what is the opposite of credit? The debit, for being quite extended. Gold is about 22% above its rising 1 year moving average. Which is to say, again, you've kind of got like on $1 million invested in gold, you've got about $220,000 that you have to eat, you have to lose before you can arguably change your mind anytime, but changing your mind on the basis of how Paul Tudor Jones does it. And that's actually about the same gap of the 1 year as Bobby Digital, Bitcoin, which is back up there making highs. And I don't know why I'm doing it, causing a fuss, consternation. Look at me, I'm over here. But I keep warning about gold mining equities, more volatile, and again demonstrated by the fact that when they work, my goodness, do they work? But they are like 37% above the 1 year moving average. So $1 million, you've got to risk $370,000 again on Paul Tudor Jones's basis before you would question being wrong. That's a lot. I mean, another way around this, if you were trying to strategize, you could, and this kind of game I would play, I'd be like, this thing is in motion. I've got to be in motion. I've got to be in play. If I was coming at it today with a blank check and a new portfolio setting up, I was like, oh my God, I have to set up my fund today. Do I do nothing? That's a risk. So my rule was always the rule of 1/3. So I would have, if I was given $100 billion, I was given $100 million. I'd put $33 million, 1/3 of it, to work today. And I would, again, on the Paul Tudor Jones basis, I would own the tech stocks. The strongest momentum trending relative, the strongest relative trends. You would own gold and Bitcoin. I just think Bitcoin has got more upside. I can see Bitcoin rising 5, 6, 7, 8 times. I can't see gold. I'd remind you that gold, with its present market capitalization of getting on to somewhere between $20 and $25 billion, it is now at the same, I'm going to say valuation. Valuation is this, it's like porn, when you see it sort of thing, but it's a metric. I want to say the market capitalization to global GDP is now at the same level as when gold was $850 back in 1980, and that it took 25, if not 27, if not 28 years for that high to be taken out. There's this notion that Bitcoin is riskier, and people scream, it's riskier because you don't understand blockchain and the technology, and it's only been around for 15 years. Yeah. But in terms of how I measure risk, is deviation with the 1 year moving average. It's the same risk as gold heresy, and it's less risky than gold mining equities. And our heavens, do I want to be long Bitcoin and short the miners? Heavens, I'm gonna look at that chart. I'm gonna create that chart. Can I create that chart? Don't know. Maybe I'm gonna ask someone to create that chart and send it in to me. But anyway, that's what I would do. I'd have I've raised $100 million. It's now fantasy portfolio time. I've invested 30 to 35 million. I bought the hot AI. I bought it via the index, the Nasdaq. If we're doing ETFs, I bought the QQQ. I've favored buying Bitcoin over gold. I bought Japan. Again, may I remind you, Japan broke a 25-year high this year, Topics. Broke through the bubble high. External investors who know a great deal more about Japanese stocks than I will ever do are willing to risk their reputations and pay new highs. I think Japan's Nikkei hit 47,000 for the first time today. We'll go on and discuss that, the reasons behind that. But I'd buy all those stocks. Again, question to me, where is, let's call it the Nikkei, where is it vis-a-vis its 1-year moving average? Let's see if there's commonality across these indices in terms of risk. And so, yeah, the Nikkei's, it's 18% above its 1 year. So would you believe it's more extended than the Nasdaq? That's kind of interesting. Those pharmaceutical stocks, I'd want some of them. Not above my line, and I'm being foolish and undisciplined because I should probably not try and buy everything, and I should discriminate on the basis of relative performance. And I'm procrastinating because I say I want to buy that biotech ETF. What is its code? I mean, there are several. Can't actually find the chart I was musing about at the weekend, but IBB, BBH, XBI. I mean, I think they're astonishingly good. And I was kind of lamenting about the lack of relative momentum, but actually looking at my mind's a little bit kind of pasted or jaded just because I've been looking at a lot of long-term quarterly data, which kind of disguises somewhat, camouflages the short term. These things have been on a tear. I do think they're great beneficiaries of AI. And I'm buying them just on the line of 20, 25-year breakouts. I love doing that. So I hope I'm revealing how my setup was to congregate my portfolio around, if I can, indices. It's I can't tell you how lucky we are, how lucky you are. You get the chance to invest in Japanese stocks, just as it's taken 25 years, and now you get to invest in the new highs. Lucky you. And the same with pharmaceutical stocks. Lucky you. And, and we mentioned AMD. Intel, another beneficiary. We're bringing technology. We're bringing it home to America. Intel's still below its 25-year highs. It's a little bit like Merck. But you got to bet in this environment. It's going to break the 25-year high. And when it does, it doubles and triples, maybe quadruples. It's the kind of environment we are in. Anyway, I'm going to perhaps break a... Oh, anyway. So many anyways. So I was saying you're lucky because you get the chance for the indices. In my day, we didn't have 25-year breakouts in indices. I mean, we did. I that's the reason I got gold. That's why gold was prominent in my development as a speculator and achieving the gains which gave me tenure. That's tenure, gave me a life as a speculator. But in the absence of indices making 10, 15, 20, 25-year breakouts, I relied upon stocks. There's and the joy. Can you hear the joy? Can you hear tiredness in my voice? Can you hear the chest infection in my voice? Can you hear my voice with the music and the winds picking up, the hurricanes getting closer, and the tropical serenade of the insects in the garden? But can you hear my voice? I would try and put together about at least 100 stocks. The joy in my voice, was that the recognition that there was always a bull market potentially beginning somewhere in the world, and that with curiosity and endeavor, I could find it. But that would be bull markets developing in very scary places, in individual stock names, and individual stock names have idiosyncratic risk. They've got, of course, there's more specific risk than an index. There's more that can go wrong, paradoxically, in the individual name than the index. That's kind of hedged away. And that's why I would have 100, 150 of these, but spread across small, medium, large cap, spread across many, many countries and time zones. And not with the idiosyncratic risk, not all of those breakouts will succeed. I mean, if you look at Merck, the large US pharmaceutical stock, which again, just from my day at the beginning when I started, when I was investing in US equities, I believe 1993, 94, 95, 96, Merck was one of the standout large cap stocks. Just one of the great Templars, one of the great iconic businesses in America that as an overseas investor you had to own. But it did break out, went to about 120, I think, and then promptly fell about 30-35% and is down to 80. I'd still keep nibbling at it. That idiosyncratic risk, I mentioned Nokia and Ericsson. These guys just never came back from their bear markets. They never came back because the Chinese government had decided that cellular data, the software management of cellular networks, was something that strategically the sovereign wanted its corporations to own. And so those corporations were encouraged to be dominant, and they didn't have to be held back by the need to make a profit. And so those stocks, the idiosyncratic risk was enormous, and they still traded 80% wides to their highs from another generation, from the NASDAQ. Heavens, hold on a second. Is there a doctor in the house? 4 weeks with a chest infection, phlegm every morning, taking hideous and really a great deal of antibiotics. Yes, I will be replacing the flora in my gut when the antibiotics are over, but when will this go away? Anyway, I still ran 5 kilometers on the beach barefoot this morning. What was I saying? I was saying, it's one of my fascinations is the Intel, which is below its 25-year high. But with that NVIDIA deal, with the US government deal, we're buying a US sponsored equity, a government-sponsored, a GSE, a government-sponsored entity. A lot of important political and business leaders want this stock to succeed. And so they've got your back. And it's a bit like the Chinese, how they had the back of other industries. So that makes me think it's going to make its high. Anyway, where there's a heresy. So I was saying to you, I start with $100 million and I've got $35 million of live risk. And I'm saying to you that I am underwriting. We said that NASDAQ is 13% above its 1-year moving average. We said that gold and we said that Bitcoin are somewhere between 21 and 23% above their moving average. That Japan is 18% above its moving average. Those biotech stocks are a good 25% above their moving average. So on a weighted average basis, it sounds as if I'm gravitating to about 20% above the moving average. And I can't sell my position if I buy it here. I've got to wear the 20% drawdown. So thankfully, I'm only 35% invested. So 20% of 35, I'm willing essentially to say I'm willing to take a 7% drawdown to be invested, albeit I'm only 35% invested. So that would be my calculation, and my hope would be hope is not a good word, not a healthy word, but my strategy, which would give Paul Tudor Jones reflux, maybe. I mean, sometimes they don't really fully tell you what they're doing, but I would be 35% invested, and I'd be saying, you know what? I reckon big cigar, not good for the chest infection, but I reckon, yeah, Nasdaq et al. Blow off top. Don't know when, but could be 12, 18 months out there. But sure as hell, between then and now, you will get some debilitating drawdowns. And the drawdown will be to the mean reversion line, which is the 1 year moving average. And I've told you ex antes. I've set out my rules. And Paul Tudor Jones, and the guy, who was the other guy? Who was the other guy I mentioned? The other market wizard, Michael Marcus. Keep a log, a loser's log. It's very provocative. A loser's log. And if you're American, and I think 45% of you that listen to the show, oh my God, I love you. American culture just doesn't like the word loser. We're winners over here. So it's provocative. But when you touch and when you lift the bonnet, when you lift the hood, and you look at the engine of some of these great legends, they're paranoid. Their number one focus is losses. It's a focus on losses so they can control the losses so that they can stay in the game. Be a world-class loser. So on an ex-ante basis, I was like, yeah. There's a 7-8% NAV hit in what I'm doing. And actually, if I'm losing 7 or 8%, I'm going to put probably I'm going to double my risk book. And I'm going to buy everything that I bought today. I'm going to buy them fresh, anew, because they've mean reverted to the 1 year moving average. And they may go a little bit below it, but my bet is that the mean reverting point will then propel them to the new super, super high. So that's kind of how I would be constructing my risk in these markets. Now, moving on from the wonderful Paul Tudor Jones, the other headline belonged to Tokyo. To my Substackers, I've been sitting on a rewrite of my summer 2000 paper, The Dawn of Chaos. It's no longer a dawn, chaos is with us, but I wanted to rewrite the paper. I wanted to rewrite it a little bit because it was about can inflation return? It was certainly speculating that the gold would begin to move. Gold being like a kind of stick it to the man, that we were moving away from everything, a world that made sense to a world that doesn't make sense. And I mean, I stir people up by saying gold is a silly asset. It's a silly asset. I think I wrote somewhere on Twitter, it's like buying equities with a credit card and having to pay what do you have to pay? You have to pay 17, 18, 20, 25%, something like paying a very high cost of carry. Stocks, they typically buy you and they pay you. They pay you a stock repurchase or a dividend. You actually get paid to take the risk. So the lack of risk premium in gold is something kind of offensive. But we're going to take on the crazy, and it serves really no economic purpose, except it's a means of dealing with social mood and changes in social mood. So I was predicting that. I had some really lousy stock to money ratios that I wanted to fix. And of course we had that awful, do we call it an assassination in America, that the Charlie guy? And so I felt that I wanted to dust that paper down. And I've been writing about Japan. And I haven't quite finished it yet. And I haven't finished it because I'm trying to finesse and I'm trying to be very elegant in telling you why, with Japan now exceeding its 25-year price highs, why it now doubles, triples. What did Nasdaq did this in 2017, and is trading 5 times higher. I think the same could be true of Japan. And it'd be very good if I could give you an elegant reason why, and I'm really struggling with it. I mean, the non-elegant reason is the yen, and yen weakness. The yen's gone from 100 to 150, and that's just enormous. And stock prices are the inverse of currency weakness, because it represents a transfer of income from the household to the corporate sector. It's good for profits, and it can create a re-rating. There'd be a question mark with regard to the price-earnings ratio you'd associate if it's a transfer of wealth to the profitability of the corporate sector, which happens at the same time as higher prints and CPI, then that would argue for a lower PE ratio. So I'm kind of stuck, and I should just publish. But in the meantime, the big news was Japan, the politicians. Again, jokers to the right of me, fools to the left. I'm stuck in the middle with Madame Watanabe. Madame Watanabe was this fictional character that lame economists in Japan used to talk about. We've got a new name, Takaichi, Sanai, Takai. Oh my God, that sounds like as if I'm like making a mockery of the nobleness of Japan. Can I tell you a story? I met a beautiful girl. I was at the barbecue bar at the Trunk Hotel in Tokyo, which is my favorite place. Favorite place. And there was just this really, 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 really hot Japanese girl, and she's kind of like rock and roll. And she was actually wearing like denim cut-off hot pants. She was wearing like boots, black t-shirt, short, really, really sexy. And I was just like, damn. And I actually sat down with that invitation with these 2 Japanese girls. Like, oh, sorry, like traffic was a killer, and started talking, and wonderful, beautiful, and I'm telling you this. Why I tell you these stories, I do not know. But since I came back from Japan late July, we've become pen pals on the Instagram. And obviously, I use the chat GPT, but we craft these messages to each other, and we send it in that beautiful, the calligraphy of Japanese characters, and just the language, the sayings, the cadence. Wow, I love it. And so I very much love Japan. So. Madame Sanai Takaichi, newly elected leader of the governing LDP bozos. And, she's going to be Japan's first woman prime minister, which is just amazing in that Asian society. But, I mean, the market went nuts. I mean, what was the Nikkei up today? Yeah, it was up the best part of 5%. 5%? An index! It was up 5%! Why? Investors. So again, signal noise. US government closed. Data, which is largely noise, closed. And so the market was not distracted. And it got 3 clean messages out of Tokyo. Pro-growth policy, the alliance with the Americans, we got stability, we've got a lady who's really into that. We're comfortable with a weaker yen equals a redistribution from the household to the corporate sector, higher profits. And if we were translating that into pictures, that is prices up 5% in the market today. And there weren't, everything was the breadth. Everything was up 5%. It wasn't like there were 7 amazing stocks in the Nikkei and they carried it, albeit property stocks. Property stocks made 20-year price breakouts today. I mean, Tokyo's got a lot of property, but those stocks are saying they're going to build more property. Anyway, and they were up 8%. But by and large, everything else was kind of up 5%. Sony's another one. Sony is not a $50 billion stock, but it was up about 5 or 6%. And that's again, new price highs. And I mentioned Sony because I want to own dopamine stocks. Dopamine, social media networks are essentially, they're like Colombian drug cartels or cigarette companies from the 1970s and 1980s when cigarette stocks were the best performing. So they were best performing in the 70s, the 80s, and half of the 1990s, 25 years. We talked at length about electronic arts. I'd want to own gaming stocks. I must look. What did Nintendo and the Sega as well? Wasn't it? I didn't look at Sega. Let's have a look. Nintendo and Sega were down today. Nintendo, but trading at 20-year price highs. Sega not. I don't care. I still buy them, but I mentioned in the context of Sony, another dopamine games company. And betting platforms. I mentioned Flutter the other day. I want to own all these stocks. And the lady herself, not the lady I'm writing, I become pen pal friends with, but the lady who's going to be the Prime Minister, she plays heavy metal drum on the weekend. Interesting. And the story is she's got a big samurai sword on the wall marked for fiscal stimulus. Oh my God. Like government debt is 260 to GDP. And a big red desk button labelled weaker yen, weaker yen, weaker yen. Do you know there was this chap, Bob, what's your name? And Bob claims he's got an AUM of $15 billion. Bob claims a great deal. Bob invited me out to Colorado to speak once. Must have been around about 2010, 2012. Lovely guy. Sells trading software, which probably doesn't work. I say that not specific to him. I just, there are no software programs that kind of work. If there are, they're owned by hedge funds and they make billion-dollar profits every year. But Bob I regarded as a friend, but he was the other side of me on dollar yen. I've been saying dollar yen, I think, goes to 200. And can I tell you why? Not really. Well, I guess the reason was that there was no way Japan was raising, the Bank of Japan was going to raise interest rates the way the US did to 5%. And to its credit, America did raise rates from nothing to 5%. Japan can't do that given the debt load. And indeed, Miss or Mrs. Is she single or married? I don't know. But Takaichi, the presumption is she's like, Bank of Japan, you're not raising interest rates. So bonds today, let's look at the JGBs. Yeah, the JGBs are not as keen on Ms. Takaichi as I am. I mean, that 30-year, have you seen the 30-year JJB? In the last 12 months or so, I think it's gone from about 210, 220, and it's tapped on a good 1 percentage point. Yeah. And 320 people watch for 3.2. Does it, will the JGB 30-year take out 320? If it does, is it going to close in on where the US 30-year is trading? If that happens, we'll be talking about it. But yeah, Bob, who was like really vicious on Twitter, with my comment and with my comments on dollar yen. Anyway, who cares? But who cares? But so another big thing, market melt-ups. Dollar yen. Dollar yen presently 150, 151. If we take out 160, and if you get a monthly close above 160, a quarterly close above 160, I swear, we're going to 200 and beyond. And that's the situation where the Nikkei doubles, triples, quadruples. And again, I wish I could tell you why, but you know what? Who cares? We're in this business to make money on hunches, calculated hunches. People still can't tell you. We talked about Tudor Jones. Why did the S&P drop 21% in the month of October 1987? Still not really very strong, great academic consensus for why that happened. Why 1929 was the high in the Dow Jones 100 years ago, and no great consistent view on why that happened. Explanations are for later. Making money's for now. I like that. So, oh my God, like I've been pushing out to 35 minutes. I fear this is 45 minutes. Let's stitch the day together. America's government numbers lay silent. Good riddance. Japan's politics spoke loud and clear. A macro legend handed you a simple rule on live television. Tech led with another kind of absurdist headline. We don't care about how absurd these things are. We only care about reaction. Bobby Digital and gold, both making new highs. The dollar probably eased a little bit. And again, I'm going to reiterate, if we are talking melt up, dollar index is going below 90. So you see, you do not need a decimal to see the shape. The market wants to go higher. So we obey the house style. Direction matters, decimals we don't care of. Price is the only confession that we listen to. And we remember the breakout doctrine. When price clears a legendary, which is to say a long time coming high, then when it retests, when it breaks, the stored energy that it releases is positively cosmic. The thousands of investors who said never again suddenly find themselves chasing. Ceilings, my friends, become trampolines. Pros don't chase the first spark. They watch. Preferably you get a pullback that holds, and then they add on the retest. That's where we are with Merck, let's say, in the pharmaceutical sector. This is how a Pop-Tart turns into a compounder, into a bagger. 2 bags, 3 bags, 4 bags, 8 bags. The runway, if the runway is real. And we respect the notion of a blow off top, dispassionately, without prejudice. The market gave you a gift today. It told you what it believes. So let's end with the shipping news. You're like, no more shipping news. Oh, rituals. The Bay of Biscay. Do you know anything I'm wrong with that? My doldrums. Bay of Biscay, I think, is more from sailing terms. That passage is more marked by violent storms. I think we're looking for becalmed doldrums. We should be about 30 degrees further north. Further north or south? I'm thinking the Azores, etc. Anyway, pressure is definitely high. Winds variable. Sea state smooth. Those winds, variable. Should I say favourable? Winds are favourable. The Fed's cutting rates. Fiscal policy is a stimulus. Monetary and fiscal stimulating. Countries historically with very strong currencies being allowed to devalue. That's again a very favourable wind. We're always in the context of equities. The sea state is smooth. Could get choppy. Weather fair, the horizon. We had uncertain. The short-term horizon is always uncertain. We could have pullbacks. We're 13 to 23% when we look across global macro assets. 13 to 25% above 1 year moving averages. The line of the tropics, the mean reversion point. So an uncertain horizon with regard to the likelihood that we may violently pull back. A medium-term horizon that we may see profoundly higher markets. And then beyond that, well, no change until it changes. My brothers and sisters, I'm off to bed. If you need drama, leave your Bloomberg, try Broadway. I made that up there on the spot. If you need money, try discipline. Remember, I'm sticking with my phrase. Kings do not chase. Kings let the prey come to them. That's what I'm thinking. Let's take a position in risk and let the risk come to the line, the 1 year moving average. Let it come to us. Tomorrow and the day after, we hunt. Good night, brothers and sisters. Oh my God, until tomorrow. It's over. And again, what do I say? Bisous, my love to you all. Thank you for entertaining me for a while in your homes and in your ears.